Prices for all kinds of goods are rising in the United States. Following years of low inflation, the U.S. inflation rate is the highest it has been in more than a decade. Why is there inflation? Prices rise over time. Take a gallon of milk. Today, it is almost 5 times what a gallon of milk cost in 1947, adjusting for today's dollar. Wages also rise over time. The median U.S. income today is 26 times what it was in 1947, adjusting for today's dollar. The gradual rise in prices is a natural response by buyers and sellers to imbalances in the chain of supply and demand. For example, if consumer demand rises more than supply, then suppliers realize they can charge more and prices go up. Typically, as prices for goods and services go up, workers demand higher pay to keep pace. To offset the higher pay, businesses raise the price of their goods. The result is a cycle of increasing prices and wages. Also, as prices rise over time, consumers begin to expect this. They will often buy more now to avoid higher prices later. This boosts economic growth, and for this reason, most economists recognize that a small amount of inflation is good for the economy. However, when the price of goods not only rises but accelerates, there is a danger of what's known as runaway inflation. When this happens, wages cannot keep pace with rising costs. The last time the U.S. had runaway inflation was during the late 1970s and early 1980s. In the worst kind of inflation, known as hyperinflation, the cost of goods can double in a matter of days. Some of the world's highest rates of inflation took place in Yugoslavia in the 1990s. Compared to these inflation crises, current U.S. inflation rates are small, but price increases have led some businesses and consumers to raise concerns. Why are prices rising now? Economists say the current surge is mostly the result of a massive increase in demand for goods as coronavirus restrictions are lifted, combined with suppliers not being able to keep pace. About a third of the May inflation increase, for example, was due to a spike in prices of used cars and trucks. Part of this rise is fueled by rental car companies, which need vehicles after they sold off their fleets during the pandemic. Gas prices are up 56% from a year ago. Economists attribute this to a variety of factors, including the high demand for gas as the U.S. economy reopens and low output by OPEC. Other goods that have jumped in price, including microchips and lumber, are the result of short-term supply chain problems. In a cascading effect, increased lumber costs have added nearly $36,000, or about 15%, to the price of the average new single-family home. Home prices are soaring, with the median sales price rising 20.1% in April from a year earlier. The housing market boom is fueled by a large imbalance between high demand and low inventory. Inflation is also rising globally as major economies reopen after coronavirus lockdowns. Countries in the Organization for Economic Cooperation and Development saw inflation surge in April to 3.3%, the highest one-month jump since 2008. China's Producer Price Index, which measures the cost of goods sold to businesses, rose 9% in May from a year ago. How to slow inflation? One of the main tools governments have to fight inflation is to increase interest rates. This makes borrowing more expensive and saving more attractive. However, while raising interest rates can slow down inflation, it can also slow economic growth. U.S. Federal Reserve Chairman Jerome Powell has said he believes the higher U.S. inflation rates are temporary and will subside once supply shortages are worked out. U.S. Treasury Secretary Janet Yellen also agreed the issue is short-term. The Fed has signaled it will not rush to raise interest rates. However, its resolve could be tested if prices continue to climb. Investors have yet to indicate much concern about rising inflation. Generally, when Wall Street gets worried, bond yields rise, but so far that has not happened.